Well, good afternoon, traders. We're looking very much at some of the dynamics that are playing through in the markets, the intermarket analysis. I'm going to try and run through a few of the things that I'm looking forward to and looking at on my screens at the moment. Certainly, in terms of global equity markets, we're very focused on what's happened both in Europe and also the US, and us in Australia are going to be beholden to moves coming through there, specifically that of the S&P. If you bring up a daily chart of the S&P, I think this is the chart that you really need to be watching at the moment. You can clearly see on the downside that there is massive support. There's massive buying orders coming through into sort of 2600. That sort of 2630, 2600 sort of area has been a key buy zone. You can see that from the long tails in the daily candles. People are happy to come and support those levels at the moment. So if we are going to see that market give way through those levels, then you're going to see a deterioration into year end. People obviously closing those books, but on the same time, if we can get a push back above 2700, 2702, as you can see from the horizontal line, I think that's the situation where we're going to see a change in momentum. Momentum studies will move higher. We'll probably move back up, or the chances of moving back up into the top end of the range of 2800 obviously increase dramatically in that situation. And of course, the dynamic of a lot of the active funds who are sitting there either slightly underperforming their benchmark or in line with their benchmark. If the market's moving higher, of course, they're missing out in that situation and they're not going to get paid at year end. So you have to be involved in the market, and there's obviously a lot of cash on the sidelines after this big drawdown we've been seeing in markets. Obviously, the big volatility playing through there as well. So if you're trading the S&P, if you're trading the Nasdaq, if you're trading global equity markets, specifically, I think for me at the moment, I'm very much focused on those levels that I talk about in the S&P. Break at 2702, we're going to probably 2800, top end of the range. I think a breakthrough that sort of support levels we've been seeing at 2600, and you're going to get a decent decline. Of course, that's going to impact us here in Australia, and specifically if you have a look at the daily chart of SPI futures, you can see that we broke through what has been rock solid support around that sort of 5600 levels in SPI futures really for the last year and a half or so, and we're back testing that level. So can we get a sustained break above that, proving that what we just saw was a failed break? Or is actually this a time now we actually start selling into this? It's going to be down to what we're seeing in the S&P as well. Another focus is really what we're going to see in the data front over the next couple of days, and I think you want to have a look at euro dollar. As you can see from the daily chart of euro dollar, price is consolidating within this kind of triangle formation. So there's clearly a battle between the bulls and the bears. No one really wanting to exert any kind of dominance at the moment, and that needs to resolve itself. And when it does, when it breaks out either way, I think you need to be involved in that trade. I think to the upside on euro dollar through 114.02, especially on a closing basis, you push back into 114.56, which you can see is really been a ceiling on euro dollar for some time. And I think if you can get a weekly close above that, then we start talking about 116, perhaps even 117 as a technical target in there. You've even got a bit of a cheeky inverse head and shoulders to look at as well. In terms of event risk, well, clearly tonight at 12:30, the US CPI numbers come out. The market has been quite sensitive to them. They have been more sensitive to CPI, consumer price inflation, over, say, core PCE. The market is expecting headline and core to be at 2.2%, so core increasing by 10 basis points. Will that do much to interest rate pricing, which of course has come off very sharply, where interest rate expectations for 2019 have come back to just under one rate hike. The market was looking back in October for somewhere over two, so it has come back quite radically, and that's probably a positive for risk assets in itself. But a good, strong, hot CPI number, and you probably see 3 or 4 basis points being added to the rates market there, and that will probably provide some upside to the US dollar. Of course, if you get a downside miss, let's say we get a one handle coming through there, then you'd be talking about probably 4 or 5 basis points coming out the rates market. And I think in that situation, euro dollar goes back into, say, the sort of high 113s, maybe into 114 over a day or two. That also sees us having to contend with the ECB meeting tomorrow at 11:45. Importantly from that, of course, they will mark the formal end of their quantitative easing program, but they're going to make it pretty clear to us that they're going to continue to reinvest those proceeds from any kind of maturing debt. I think the strategists out there want to have a look at the new capital key levels. This is the allocation of bond buyings by specific countries, or the percentage which they can look at, and also looking at their new targets for growth and inflation and those various factors as well. But I think they're going to make it pretty clear that they're into their bond buying program, but they will be renegotiating and reinvesting those proceeds for a period going forward. And the market isn't expecting rate hikes anytime soon. We're still expecting those if they ever raise them, that is, 2020. So a lot to look out for, and that's just before we get what I think is going to be really important on Friday, where we get the PMI series playing through in Europe, and we're expecting a bit of an improvement there. And recall, the ECB themselves have expected to see a bit of a rebound in some of that data. They have said the weakness that we've seen of late has been transitory. So definitely something to look out for, and we do need to see that resolved on euro dollar at the moment playing through. The other pair which we're seeing a lot of interest in is what we're seeing in the sterling in cable and the sterling crosses. Of course, the speculation this morning has been that we have seen 48 letters being handed to Graham Brady, who heads the 1922 committee. That has been unconfirmed, and there's been a lot of sort of rebuttals that they've actually even seen the 48 letters. But let's say they have, and Graham Brady will shed light on that soon with a meeting with Theresa May, who herself is in Brussels trying to fight for a better deal, which she won't get. And I think in that situation, if we are going to see a leadership challenge being thrown down, who are the key contenders? You've got to be looking at, Javid, the Home Secretary. You've got to be looking at Boris Johnson. You've got to be looking at Dominic Raab. Each of those different candidates have their own stance on Brexit and the negotiations and how they want to, take this forward. And of course, in that situation, the pound's going to react differently. She may even continue keeping her job, although in my opinion, I don't see why you would back Theresa May. It's such a shambles at the way the things are going at the moment. You need a new mandate, you need new leadership to play through. But we haven't shown anyone really stepping forward at this point and people actually making political moves to get behind an individual at this stage. But of course, the pound is still very much beholden to any headline risk. It's very hard, it's oversold, it's underowned. There's no liquidity in the pound at the moment. It's a tough gig there as well, but it's one that we'll be watching very closely ahead of this negotiating period where she's trying to fight for a better deal. Unfortunately, I don't think she's going to get what the market wants or what she wants in that situation. Also watching the Aussie as we go through European trade today and Asian trade today, very much driven by what we've been seeing in its relationship as that sort of EM proxy. If you look at the daily chart of Aussie dollar, we're still below the 5-day exponential. You can still see us holding below that recent horizontal resistance levels. Will price roll over or will we start seeing a move back up? A lot of that will depend on risk appetite and of course that relationship between the US and Sino situations there as well. So we're going to chop around I think in the next sort of 24 hours. Let's see how that CPI data plays through.